Hey, Sats fans, welcome back to Swan Signal Live. It's the day before Election Day. Big moment in American history. We'll talk a little bit about a recap of the candidates' mentions and discussions about Bitcoin over the campaign. We'll talk about what we think will happen in the near term, long term with Bitcoin, consequences of the election. We're going to talk about Fed rate increases. We're going to talk about sound money and finance and macro in general with our special guest, Larry Lepard. You all know him. You all love him. And we'll bring him up right now. Of course, I'm here with my co-host, John Haar, as well. John, what's going on, man?
What's up, guys? Great to be here. Great to be here with you, Brady, and love having a guest, and not just any guest, but the great Larry Lepard. So
you guys
looking forward to it.
you guys are very kind. I'm just a squirrel looking for a nut. You guys are two of my favorite guys, so this should be fun.
Appreciate you, man. That was
if you don't drag me into lots of stuff where I drop F-bombs and get in trouble with my wife.
That's okay. It's all good. This is an adult show. Was that a metaphor or that you chose about the squirrel in particular for a reason today? I'm just curious. It's been trending all over Twitter. Apparently,
which one is that?
There's this. Have you seen this? I know you've been hard at work on your book, so maybe you didn't see this.
No,
but
I know the squirrel story, but what else?
Yeah, that's it. The squirrel story. You said you're a squirrel looking for a nut.
No, I say that very commonly. I'd forgotten the connection between that and what just went on, that the government executed a pet squirrel.
Yeah, it's crazy, right?
It might have been Freudian on my part.
Amazing. Well, we've got a lot to talk about. It's not going to be the squirrel. I can't even remember his name, Peanut or something like that. Yeah. Peanut the squirrel. We're going to talk about sound money and Bitcoin. And this is a momentous day, guys. This campaign has lasted what, year and a half. Trump has been campaigning for 10 years now, or almost 10 years now, since he was first running for president. And so here we are now. We've had a lot in terms of, the first election that Trump ran in against Hillary Clinton. A lot has happened in terms of Bitcoin being brought up during federal elections and being part of the discourse. And this year, it just blew the previous federal elections out of the water. Presidential elections the discussion was talking about Bitcoin consistently throughout this past year. And we had some big, I guess, glass ceilings broken for Bitcoin. It is out there now on the highest, political discussions happening in this world. And so let's just take a little look back on the kind of momentous occasions for Bitcoin over this past presidential election cycle. I guess we start with Trump, right? He really started the conversation about Bitcoin back in April or thereabouts, maybe March, where he first mentioned Bitcoin at one of his speeches. And at the time, the FIT21 bill was being discussed in Congress, which was financial innovation for technology. I'm not sure if there was a Bitcoiner responsible for the 2021 part. It's 21st century. But it's interesting because it does focus on regulatory measures and clarity around crypto. And the White House had actually issued an opinion about the bill. And they'll often do this. They just issue like a one-sheeter. Here's what we think about this bill that you're discussing. And at the bottom of this initial opinion that came from the White House about the FIT21 bill, it said that we will veto this bill if it comes to the president's desk, right? And so they'll let the Congress know their intentions there so they can factor that in to how they handle the bill. The following week after that, promise to veto the bill was made, Trump started talking about Bitcoin. The following week, the White House reissues its opinion about the FIT21 bill, takes away the promise to veto the bill, and has softer language in its stance on the FIT21 bill, which then proceeded to be passed in the House of Representatives with 71 Democratic votes. So massive bipartisan vote on this bill in the House. It's hard not to believe that a major presidential candidate, in the opposition party from that who is occupying the White House, didn't have some kind of effect on this, turnabout.
Well,
go ahead, Larry.
Yeah, I think that's right. And when I tend to shit on all our crypto brethren because, as you know, I'm a maxi and I don't tend to like everybody else in the crypto space. But this is one case where it was actually helpful to have so many crypto people and the Web3 people and the Silicon Valley people. I mean, when that bill started being debated, the phones were ringing off the hook, and there was a lot of griping that, what are you guys talking about? This is an important part of our economy. We're trying to invest and grow in it, and you're talking about shutting it down. No, that's not going to work. And so, yeah, look, Washington's incredibly broken, dysfunctional, and evil, but yet they still do kind of listen to people because they know that if they're going to lose votes, they're going to get voted out. So, we saw that transition, and it's interesting. We also saw an evolution in Trump's thinking. I mean, a year or two ago, Trump was negative on Bitcoin. And yet I think Vivek got to him and, whispered in his ear, explained it to him what it was, and he changed, and that's a real positive step. And so yeah, it just as, there was a time when Larry Fink was against Bitcoin, and, he obviously did the calculation and realized, well, I can be wrong or I can join this thing. And so, he joined it, which was the right decision. And I'm not one of his fans. He's kind of a fiat lord, but he was smart enough to understand what's inevitable. And I think that's what's happening with politicians too, on both sides of that. Although, don't get me wrong, I think that there's no doubt that a Harris administration with, Elizabeth Warren hanging around in the background would be much worse for crypto than a Trump administration, just much, much worse. And so,
do you think that Elizabeth Warren has much sway over the Democratic Party on this issue anymore? Her whole war on crypto is totally flopped.
Yeah, her whole anti-crypto army. It's hurt them perhaps, but I think she still probably does. I don't know for sure. Probably the best expert on that would be Caitlin, because she listens to very carefully and knows a lot of people in DC who kind of have the inside line. But
yeah,
she tells me it's pretty corrupt, and there's still a very big part of the Democratic Party that's against it. So
yeah,
so be it. Yeah.
I'm just laughing at a great comment here in the chat.
I've been looking at
There's two Larrys, but only one of them is a fiat lord, not the Larry we're talking to today.
No, I am not a fiat lord. I can assure you of that. I paid the sound money price. I held gold from 2011 to 2015.
So did you give up all or most of your gold then for Bitcoin?
I've sold a lot of it, not all of it. I still have some of it. I've said over and over again, I think Bitcoin will be a much better performing asset, but there's a place for gold in the low volatility bucket, and
sure.
And the bribing the guards as you leave the country bucket, because the guards might not be smart enough to take crypto,
right?
Bitcoin. But it's interesting the way it happens too. You get some Bitcoin, and what happens is it goes up a lot, and suddenly your weighting is a lot higher because the gold didn't keep pace. So I've said in the past I'm probably 60%. All my investable assets, and I've got a large chunk of assets still in my fund, which is really a gold mining stock fund. And so, probably my investable assets, I'm probably 60% Bitcoin.
So then let's see, later on in the summer, Trump gave a speech at the Bitcoin conference in Nashville, where he made some big promises. First of all, that he would free Ross Ulbricht on day one,
right?
Which resulted in a resounding
huzzas,
standing ovation. So he
also said he would fire Gary Gensler day one, right?
That's right. I think that's what got that
really got people going
as loud. And I remember him being surprised. And he was like, "Oh, I didn't know he was that unpopular." And then of course he promised Bitcoin strategic reserve.
Yeah.
And this came after, I believe, JFK spoke, maybe the previous day. And that speech that he delivered was clear at this point by far the best speech about Bitcoin given by a prominent politician, especially one who's running for president.
Totally agree. Yeah, no, that's anyone who hasn't taken the time to listen to that, Google the RFK speech at Nashville this past summer. It was so impressive. He completely understands it. He holds it personally. He's got his kids holding it, etc. So, I think that in a Trump administration, he will have a voice. So I view that as an enormous positive.
Yeah, that was an amazing speech. He knew what he was talking about. He sounded like a Bitcoiner. He sounded like a Bitcoiner. Seems to be that way. So that was a momentous weekend. Of course, there were other politicians up there. Cynthia Lummis introduced the bill for a Bitcoin strategic reserve. So that was a momentous weekend for Bitcoin as a topic in high-level politics in the United States. And then I think Kamala Harris was kind of forced into, just like I think the White House was forced into removing the veto promise for the FIT21 bill, especially if they anticipated there being 71 Democrats voting for the bill, was pushed to be more open to crypto. She promised that she would take a positive view toward regulating crypto such that it would have a place, like the United States would be a place for innovation, etc. No discussion about Bitcoin in particular at all, but at least there's some evidence that there's a bipartisan sort of coalition building around embracing Bitcoin and crypto.
And as I recall, there was a group of Democrats, some of that 71, who wrote her a letter, an open letter, and said, "Hey, this position you're taking is not helpful to us."
Yeah.
And I think that drove her decision making on backing off on being so anti-crypto. So
right.
Yeah,
we opened the year with Elizabeth Warren with the war on crypto, and it just completely flopped. The Greenpeace campaign that went absolutely nowhere. They had like 100 followers on Twitter, and all the impressions were Bitcoiners embracing.
Yeah, I mean, what you're seeing, I think, is what we would all call the Overton window shifting to this was really fringe and crazy, and it was the haven of people doing illegal things, which is the way they originally tried to paint it. To, oh my goodness, this is actually an emerging asset category and asset class, and BlackRock supports it, and so on and so forth. And so, we're seeing more and more of that, and that's a very positive thing, I think.
Agreed. So I think that really brings us just a high-level overview of the major kind of checkpoints of Bitcoin being discussed in the presidential election. So it seems that it's been a positive on both sides. We've seen some bipartisan action embracing Bitcoin and crypto. In general, we've seen some very high-level understanding being delivered about Bitcoin from RFK. All of this, of course, as I said before we jumped on live, is pandering until something is done. So,
that's right. I mean, some of the comments are like, "Do we trust Trump to do what he said he's going to do?" We'll have to see.
Yeah.
I mean, I tell you, if he's elected and he doesn't free Ross on day one, there are going to be a lot of pissed off Bitcoiners.
It's going to get noisy. It's going to get noisy.
Really noisy.
Yeah.
So I think he'll have a hard time backing down from that. And that one doesn't really cost him very much. That's not a hard thing to do.
Right. There's not a whole lot of political downside to that.
Right.
To that action, for sure. The Bitcoin Policy Institute released a report today, which I have not yet had a time to look at. John, you may have taken a little bit of a skim on it. I don't know. About a Bitcoin strategic reserve, going in depth about how that would work and what it would look like. So, relating back to Trump's promise, John, do you know anything about the report? If not, just give us your thoughts about a Bitcoin strategic reserve, how it might work. Is it important?
For sure. Yeah. I think for starters, we have to say this is in the category of it's big just because they're talking about it. It's big just because all the people you mentioned, Brady, showed up at the Bitcoin conference, Trump, Cynthia Lummis, RFK, Vivek, etc. It's big just that they're there. Let's forget about them passing legislation. That's going to have to come afterwards. But if I just list off a few sections of their report here, so these are like the big sections. They do strategic imperative, relationship with U.S. interests, strategic Bitcoin reserve, a policy framework, objections and replies. I always love when people do that. You try to, preempt all the haters out there. And then lastly is conclusion and recommendations. And then there's like some subcategories within those 5 that I just listed. They really do a good job here. It's 53 pages. Again, it's from the Bitcoin Policy Institute. I know some people personally who do work for them. I think they're very impressive. They're very level-headed people with good experience themselves in their own careers and their own jobs. So I think anytime they put something out, it's very high signal. And we'll see if this catches the ear of various politicians. But it's good that we have people on the Bitcoin side making these types of arguments, again, from a very level-headed perspective. So we've got the memes on Twitter, and we've got the dense 53-page policy report. Take your pick.
Yeah. Yeah, look, it's all good. I mean, things are going in our direction, and that's, what I'm most excited about is we're winning, and we're close to the breakout in the price in my estimation. So that, as we get through the 73 level, 73, 74 all-time high level, we're going to squirt up to 100 very quickly, and then on to much higher numbers. And I think the reason all that's going to occur is because of the broken and dysfunctional budget process in DC, and the fact that the debt just keeps growing. I mean, seemingly week by week. I mean, I don't know, Brady, you might want to pull up that tweet from Sven Henrik that you and I were talking about before the meeting before we started this. I mean, it's really kind of stunning. I mean, they ran a huge deficit last year, and took the debt up to a very high level. But since the end of the year, the fiscal year ends September 30. And take a look at this. They had 104 in debt in one day, 655 in a little over 5 weeks. So it's an annual run rate pace of $6.8 trillion. I mean, good God, man. I mean, now maybe it'll slow down. Maybe there's some one-time stuff in there. There must be. It can't be that bad. But boy, it's, this is not good. And, as this continues, what will, I think, continue is that more and more the U.S. bond market is going to see that they are, as Luke Groman says, they are the sucker at the card table, and so they're going to get out of there, because they're going to realize that there's just no way they're going to have any kind of a decent return, on a real basis, and maybe even not on a nominal basis. So, in my view, these things. This is why. If you look at the chart of Bitcoin, you look at the chart of gold, this is why they're, both gold's making all-time new highs, and Bitcoin's about to make all-time new highs. So, and this is why, they and it's gotten to be where, this was kind of just whispered about by all of us maybe a year ago. Now you see very smart, very, outspoken, but, acceptable to the mainstream, money managers like Paul Tudor Jones, as an example, saying, there's no way out of this thing except with a lot of inflation. And that's why I own, Bitcoin, gold, and commodities, because, we are entering a period of massive inflation. And I think he's right. I think the mistake a lot of people are making, is thinking that for some reason the U.S. is different, that the U.S. is, the reserve currency and the biggest and leading country in the world, and, so on and so forth, and that therefore it cannot happen here. But if you look at other countries, there are hundreds of examples of this over the last couple hundred years of civilization, where other countries that have behaved in the way we behaved in terms of spending, deficits, debt growth, etc., they all end badly. Either the debt collapses and you have a depression, or more likely you print the money because you can, and that leads to serious inflation. And then if you really get stupid about it, and borderline it's possible here, and I'm not saying it will happen, I rate it as a tail case, but not a zero probability tail case. You end up in hyperinflation. So, it's a mess. And those of us who are in sound money, we're just here because we're trying to protect ourselves from our government, which is out of control. I mean, to me, one of the stunning things, Brady, was that they had that debate, between Trump and Kamala, and there were no questions about the U.S. fiscal situation. None, zero. Yeah. I mean, to me, if I look at the country, and there are a lot of things wrong in the country. I mean, immigration, a million things wrong in the country. But certainly, you got to consider that one of the, inflation is probably one of the highest things wrong in the country, and the inflation is driven by the fiscal situation, and it was never even talked about. And it's just like, wow.
We're all Keynesians now. I think.
Yeah, right. That's
1969, 1970. Yeah, we're all Stephanie Kelton now.
Yeah, well, that's right. I mean, the book I'm writing, I talk about that. I mean, if Stephanie Kelton gets control of these, of the monetary process, I mean, we're going to have hyperinflation. There's just no doubt. I mean, I think we may have it almost no matter what, but it's going to take some time, because they've got more cards to play. I mean, we've seen that they're really good at can kicking. And, most recent example being Silicon Valley Bank. I mean, that was a real crack in the system, and they managed to patch it up real quickly and sweep it under the rug. But
Yep.
there'll be more.
And they're going to get harder and harder to patch.
Well, that's the thing. They get harder and harder to patch. And eventually, in my opinion, Powell is going to have one of these real deer in the headlight moments where he's going to realize, oh my God, I am completely effed. I mean, there's no way out of this thing. And they're going to need some excuse. I mean, they had the COVID excuse to print the last batch of money. They're going to need some other excuse, which is probably why they're fiddling around with all the war shit.
Yep, no doubt. Yeah, I got to manufacture another
if you're
reason.
If you're at war, then you can say, well, it's exigent circumstances. We're at war.
You got to feed that industrial war machine.
Yeah, we got it's existential. We got to protect the country. Ignore the fact that we're printing a ton of money. So,
well, fear has been extremely effective as an excuse to print money.
Yeah, well, that's exactly
so it's
right.
just the same playbook over and over again.
Yeah, it really is.
20-year-long wars.
Yeah, it's Hank Paulson, with a gun at Nancy Pelosi's head, basically saying, give us the TARP, or else, we're gonna shoot your financial system, and nothing's gonna work.
Yeah. Wow.
And I mean, it really is it's banker extortion. So.
Yeah. I saw this, I heard this today on the Bitcoiner Veterans space in the morning, and I just checked it with ChatGPT. If I made $21 million every day, because this was the claim, since the Great Pyramids were built, how much money would I have right now? So the answer, if you made $21 million every day since the Great Pyramids were built, around 2560 BCE, you would have approximately $35.16 trillion today. And what's our debt?
It's about the same number, 36 or something, right?
Yeah, this is not, you wouldn't even be able to pay off the debt. $21 million per day since the pyramids were built.
Every day, yeah.
That just gives you an idea, because it's so hard to understand how much a
trillion.
trillion.
A trillion doesn't really register. I think it's shocking. People don't understand. A trillion seconds ago was like 31,000 years ago. I mean, it's amazing, right? I mean, what comes after a trillion? A quadrillion, I think. I mean, it's
right.
Look, the problem is the compounding of these numbers, and the math just doesn't work. And so this is why, in my view, we will have a crisis within the next 10 years, probably much shorter than 10, but I place 10 as the absolute outside, probably most likely before 2030.
So let me ask you this, Larry, like sound money, proponents, gold bugs and Austrian economists have been saying this for a long time, that it can't last that much longer. They can't kick the can down the road much further. What makes this time different than the 20 times it's been called before?
Yeah, no, it's a great question. It's the fact that it's gotten so visible and so large, and it's the filling up the stadium by doubling the water every minute. Eventually the doubles just get so large that they just goes parabolic straight up. So it's compound math, I guess.
So just the whole numbers are the difference now. The whole numbers are just getting too big.
Yeah, the numbers are just getting too big.
You're finally reaching the asymptote.
That's exactly right. And so I don't see. I mean, look, I suppose they could keep the system going, and we'd have, we'd all be making $1 million a year, and gasoline would be $100 a gallon. I mean, I suppose that's possible. But I think that more likely is that something breaks, and the currency is a function of people's trust in the underlying currency. And those of us who are in Bitcoin, we trust it because we know it's mathematical, we know it's an algorithm, a protocol that can't be messed with, and that gives us a reason to trust it. Fiat is politically driven, and it's based on human beings, and they've as Satoshi said in some of his comments, that trust has been violated frequently by central banks, and so more and more people are coming to realize that. And I've studied a lot of hyperinflations, and hyperinflations occur when everybody knows they can never stop. Now, I think the three of us would pretty much know they can never stop printing money, that if it's Max's point, you can't taper a Ponzi. So they cannot stop printing money, therefore they will continue to print money, and the compounding laws of inflation are such that it's like drinking. I mean, you need more and more to get the same level of high. And so as the more and more becomes more and more obvious, I mean, you're gonna have a rejection of the money. I guess that's the bottom line. I mean, and at that point in time, you get a Silicon Valley like event where the exits get crowded. I mean, 10 days before Silicon Valley failed, it was fine. They sold some bonds. Some guy did the math. The math showed they had 20 billion of negative equity, not 20 billion of positive equity. He called up all his friends in Silicon Valley who had all the money there. They all said, "Oh shit, this bank is bankrupt and we've only got a $250,000 coverage from the FDIC. Let's get out of here." And in one day they lost $47 billion worth of deposits. I mean, that's one day. It's like a digital bank run. And why did that occur? It occurred because there was, recognition changed. In a digital age, recognition changes very, very quickly. Here we are speaking from all different corners of the country in real time, visually. This is stuff we couldn't even do a while ago. And information moves incredibly quickly. And so what will happen is people will all come to we'll wake up one day and, Bitcoin will be at, 200,000. And some people think this is the greatest thing in the world. I'm going to sell mine. Other people say, no, I better get some. Because it's at 200 going to 1 million, gold will be at 5,000 going to 10,000. And some people say, what the hell's going on? And the rest of us will be going, oh, I know what's going on. The currency's failing.
Mm-hmm.
And, those of you who have cash, you're about to lose it and lose it all. And this is what happened in Weimar. It's your money is about to become worthless. Now, as I say, there will be swings back and forth, because when that's occurring, then the government will come out with some stuff and no, we're going to save the currency, this, that, and the other. And so, Dan Oliver's Weimar chart that shows high volatility, that'll be relevant. But the point is that in my opinion, we are beyond the point at which we can turn back. I mean, we've crossed the event horizon. This is the point of Lynn's tweet. Nothing stops this train. I mean, sadly, it's kind of baked in the cake. Now, there is a better way to do it than going all the way to hyperinflation, and that would be to return to sound money with a monetary reset, kind of a modern version of what FDR did. But that takes a lot of political courage and a lot of intelligence. And I look at people we have in DC, and I don't think there's a lot of that around. So my gut is that sadly we're going to run it right into the wall, and then we'll come out of it, and everyone will realize that what happened was the currency failed, and in turn everyone will realize we need a sound currency, and so we'll select one. And the other history of these hyperinflations is that when they're over, things get much better. If you return to a sound money standard, if you can prevent everybody killing each other in a widespread war, which is a big if, then if you still have all the people and the assets and the technology and everything else, really all that's wrong is the money's broken. And what will happen? Well, people who have big money balances will be poor. For the average person who doesn't have a lot of assets and doesn't have a lot of liabilities, they'll come out the other side and they'll be dealing with sound money. You're a plumber. People are still going to need to have their toilets fixed. You're going to be fine.
Now, all of a sudden, now you're getting Bitcoin.
Yeah, well, that's right.
Instead of money that's wasting away. Yeah.
Yeah, you're getting paid in something that doesn't depreciate every day. So,
all right, I got one more follow-up, John. I'll throw it to you after this one.
Yeah, go ahead.
Okay, so since tomorrow is the election, kind of going back to that, Elon Musk sounds like is going to be appointed to a new government agency called the DOGE, the Department of Government Efficiency, which, you got to love the memes and the meme tie-ins, right? Everywhere.
Right.
So yeah, I do appreciate that very much. He has said that somebody asked him, how much are you going to be able to cut off the $6 trillion budget? And he said, I think about $2 trillion. It felt like it was kind of off the cuff. Howard Lutnick gave an interview with Anthony Pompliano, which I highly recommend everyone checking out. It was a really good interview and some good personal stories that were really moving as well. But he was talking about, speaks with Trump and Elon on a regular basis, and is going to be part of this effort, this government efficiency effort. He said 1 trillion to 1.5 trillion, maybe. He's skeptical a little bit about the going all the way up to 2 trillion. But even if we did that, like going back to Lynn's point, nothing stops this train, right? Even if we do something like that and you're eliminating 25% of the federal budget, does that give us any path toward paying down this debt, or at least servicing our debt, so it doesn't
Look,
increase.
at the margin, sure, it all helps. I mean, I'm skeptical of the two. I mean, the biggest categories really are Social Security and Medicare, and they've been kind of the third rail.
And military and debt servicing. Those are the top four.
Yeah, the top four categories. And so, I mean, you go in and fire some government employees, fine, but that's not where all the money is. I mean, it's, yeah, look, they could do all of the things you're describing, and that would make the situation better. However, those are also all very recessionary, right? I mean, I think the big elephant in the room that most people aren't really focusing on is that the bubble that we call the stock market. I mean, if this stock market goes down, and I know there are a lot of people listening to this who don't think that's possible because since 2008 it's been nothing but a buy the dip kind of market. All the math just changes. I mean, people will feel poor, tax revenue will go down, companies will be cutting back, unemployment will rise. I mean, this really is the biggest bubble since 1929. And, look at the aftermath of 1929. You had, 30% unemployment, and the stock market fell 89%, peak to bottom. And, that's not going to solve the U.S. federal budget deficit, right? Yeah. So, I mean, it's, they're really, really trapped because they kind of need to keep this system of what I call creditism. Richard Duncan created that phrase, but we live in a Keynesian credit-driven world and based on free money that's pumped all this stuff up. And if they let it start coming down, it's going to be Great Depression-like. And, we know how they're going to deal with that because Bernanke told us how they're going to deal with that. Deflation can't happen here because they have a technology called a printing press. So, fine. I mean, my model is that, yeah, they may run it up a bit higher, but then eventually this bubble will pop. When it does, the market will come down. When that occurs, all the problems we're talking about, I mean, one of the most amazing things to me is that we're running these deficits and we're running this debt as high as it is in a relatively, not for the lower middle class, but for most of the country, a relatively healthy economy. I mean, unemployment's not spiking. The stock market's doing reasonably well. And yet we're running this enormous deficit as if, and the debt to GDP is like World War II levels. So, if any one of these things changes, I mean, the kinds of things that Elon is talking about in terms of cutting back expenses, that's massively recessionary. So you've kind of got, you got a lot of moving pieces. I mean, that's going to, so there'll be less tax income and yeah, he may be cutting expenses, but tax revenues will fall too. So it's not so simple. It really is a Gordian knot that they've got themselves tied into. And, how you crack it, I mean, I don't think no one has the answer. I don't have the answer, but I think that all we can each individually do is protect ourselves and our family. And I think there's a reasonably high assurance that what the government's going to do is they're going to try and print, because the printer is the hammer that they've got. And so everything looks like a nail. Yeah. Right. And that means that they're going to debase the money further. So, here we are with what we hold. But how it unfolds, I don't know. But I do fear, I mean, I have to say, honestly, I fear that it's going to be really ugly, because the size of this bubble is really, really extreme. I mean, we have a gross sovereign debt bubble. I mean, it's just unbelievable. And I mean, go look at John Hussman's charts on the valuations of the stock market, or look at the Buffett indicator. I mean, the stock market is more overvalued today than it was at the peak in 1929. And coming out of 1929, as I say, it fell 89%. So, if that's in our future, look out. And the Fed will follow the playbook they followed every other time, and it's worked every other time, right? The dot-com bubble blew up, fine. Greenspan says, go get an arm, borrow against your house, takes rate to 1%. We get a housing bubble. Housing bubble blows up. They said, fine, take rates to zero, let all the private equity guys borrow at zero and buy up industries and businesses, and create a stock market bubble. Well, there's no intergalactic level above the sovereign currency level.
Yeah.
Right. Yeah. And so there is not another bubble to inflate. This is the last bubble by definition. When this one breaks, they either let it correct naturally, which will be very recessionary / depressionary, or they react with the printer, the hammer they've got, and they trash and destroy the currency. And my sense is it'll be the latter. And how far it goes in terms of being destroyed, I mean, there are those who argue that, well, just really high inflation over and above the underlying growth rate of GDP will kind of get it done, and we'll get back down to, it's financial repression is what they call it. It's what they did kind of after World War II, but the demographics were much better after World War II. But they'll get it back down to a reasonable level, and that's the bull case for how we get out of this. We just have some really high inflation, and eventually we get things back under control again. The bear case is that high inflation becomes hyperinflation.
So here's what I want. I would be in favor of UBI in this scenario, because we've essentially had universal basic income for the rich under a fiat system, right? And like you said, like, let's just print money at zero and give it to the big bankers and investors, and they can buy up all the property and send, property prices sky high and buy up all the assets on the stock market, so that, which we don't have access to, or a lot of like regular Americans don't really have much exposure to the stock market, right? So they're benefiting from this, the Cantillon effect.
Yeah.
What I would love to see is next time that we print a whole bunch of money, let's just give everyone like a Bitcoin savings account, kind of like a 401k, but it's just like you can withdraw your Bitcoin, to your own wallet, and let's just distribute sound money to like all the plebs out there, because we've been giving money for so long to the 1% and the 0.1%, that the way that we should like hyperinflate the money is just print a whole lot of US dollars and buy a bunch of Bitcoin and give it to Americans. That's what I would do. And then just let the dollar die and go onto a Bitcoin standard. I think that's the fair way to do it. John, I'll turn it over to you for some questions, topics.
Yeah.
Let me know if you need me to bring anything up.
Okay. Yeah. No, a lot of different directions to go. On the last point, I will say and this is coming from someone, I consider myself a pretty hardcore libertarian, been a Ron Paul follower since 2008, 2009. I want the government to be as small as possible. On Mises Institute, I've read some anarcho-capitalist stuff. So like that's where I'm coming from, right? But I do think there's a strong case to be made to say, hey, we've basically had redistributive policies to the top 0.1%, 1%, 10% for decades. And how you handle that, I think there's debate. I'm not saying there's one way to handle it, but you just reminded me of something, Brady. One, because I wanted to kind of agree that I think there could be a good case to say, hey, let's do some redistribution to the lower end that didn't benefit from all this money printing and asset price appreciation, real estate, et cetera. The tricky thing is you can't just put that in as a policy that's now just part of your system forever, because now, that's going to have its own problems. But almost as like a one-time redistribution, I actually think there's a good case to be made.
It would be an ethical redistribution, to be honest, because
correct.
We all got screwed over for a long time.
And I'll just put some numbers around this. And this was just circulating on Twitter recently. It came from, the source was JP Morgan put it together, but they sourced it from the Fed. And the chart says, I'll ping it to you now, Brady, but I'll describe it as you're pulling it up. The chart is showing wealth percent change in household net worth from Q4 2019 to 2Q 2024. So the reason they chose fourth quarter 2019, that's right before COVID, of course. So it's basically saying, hey, what did all these policies, here we go. What did all these policies of COVID do to different income net worth percentiles? And basically someone originally posted this and they were kind of saying, look at this, look how good this is for the bottom 50%. And I had to say to the guy, I was like, I'm not sure you're applying percentages correctly here, because if you're starting, and I just looked it up quickly, I just did ChatGPT, what is approximately the median net worth of the top 1% in the US? And I think it was something like 20, 25 million, something like that. Or even call it 10 million, make the math easy. And then you look at the bottom 50%, that could be anywhere from people with a negative net worth because they have debt, or, hundreds of dollars of net worth, or maybe $10,000 net worth. So let's just say you have $10,000 of net worth, right? And it roughly doubled. You've got an extra $10,000. If you had $10 million in net worth and it went up 25%, you've got $2.5 million. And last time I checked, when you go to buy a house, to buy something at the store, to pay for your kids' education or healthcare, you don't go in there with percentages and say, hey, I was
I
up
was gonna say,
95% last year.
Yeah, to me, this chart's extremely misleading. I mean, yeah, sure, it's a higher percentage they're getting, but off of such a low basis, which is the point you're making, and I agree with that.
Exactly. So yeah, first I just wanted to say that, and then secondly,
I mean, we can
go ahead, Brady.
Hold on. Let me bring up the top chart here, right?
Yeah.
The top like 5 charts here about wealth inequality. All right, GDP per capita, real earnings over here. So maybe they're like, here's income. So maybe they are. What is this? What is the time frame here?
That's only 5. That's just since COVID. Yeah.
Yeah. So it's 5 years. I mean, let's zoom out a little bit.
Oh yeah, it's much worse than. It's not like this trend just got in place.
Yeah.
In the last 5 years.
Yeah.
Yeah.
I mean, and trying to figure out the policy prescriptions is really, really hard. I mean,
it is. Yeah.
Because somebody is going to be a loser here. I mean, there's we've made more commitments than we can fulfill, and so somebody's going to take pain. We'll just have to wait and see, right? I mean, I think that there's actually kind of a natural. I mean, to me, total fiat failure would actually be kind of a natural healing process, as painful as that might be and sound. It would reset things, and if you stored all your money in fiat, you'd be broke.
Warren Buffett.
Yeah, right. And but guess what? If you had 2 strong arms and legs, and you knew how to work, and you're young, you're going to be fine. It's a very upside down system right now, and I don't have the answer for how to fix it. But I do know that at the end of the day, the way to fix it is, the way to get back to a system which isn't broken is to be on a system where the money can't be printed, to be on a sound money system. And I think nature is healing, and I think we will naturally evolve in that direction. But as to how and the path, it's very hard. There are too many moving pieces to know. It's kind of how I see it.
Yeah. And in terms of what you guys were chatting about before, in terms of like a really extreme negative outcome, whether we call it, hyperinflation, currency failure, whatever we want to say, personally, I put that at probably, less than 5% chance of happening in my lifetime. That's how I'd personally handicap it. But I think it's important to say that, what's been happening for the last 110 years, pick that not randomly, that's roughly since the Federal Reserve was created. There hasn't been a USD hyperinflation, hasn't been a currency failure, but the USD's lost purchasing power virtually every single year. Yep. Even if you just want to look at the last 10 years, yep. USD became the global reserve currency in the last 110 years. Treasury's global reserve asset, none of that went away in the last 10 years, right? Yet Bitcoin and gold have done, very well. Sound money assets have done very well. So you don't necessarily have to believe in this extreme negative outcome to say, hey, I would like to have some Bitcoin to protect myself. And personally, what I do think, not the extreme negative outcome, but things like capital controls or financial censorship, or maybe confiscation in some cases, I think that is probably more than a 5% chance likely to happen in various countries around the world. It already does happen in, developing countries around the world. So throw a sprinkle of that in there, and you don't have to believe hyperinflation is coming to, want to.
Yeah, no. As I say, we can make it without hyperinflation. Arguably, it'd be much less painful if we just kind of continue to grow and we migrate to this sound money system. And the dollar makes a great payment rail because we've got everything denominated in dollars out there. But just over time, this other one replaces it, and that's my hope for scenario. I tend to worry though that this fiscal situation that we've gotten ourselves into isn't going to allow us to just kind of gradually migrate in the right direction that you've described. That these things are getting closer together and they're getting larger. and so, which, it's back to Brady's point of it's starting to go, parabolic up, and so can we slow that down enough to make the transition gradual and less painful? I hope so, but I worry that we won't, based on what we're seeing.
John, why don't you think it's more of a chance, more of a possibility than just the 5% in your lifetime? That's a long.
Yeah, I was going to say that's a lot lower than I am, John.
50 years. Like, how?
Yeah.
I mean, do you agree that nothing stops this train? Are we just in this fiscal? We're done. Like it's over, and we can see the end, but we can't stop it. It seems like you're not. So what stops the train?
I'm on the nothing stops this train for sure.
Okay, then if that's the case, then how could
how do they
not
extend it forever?
hyperinflate within 50 years?
Yeah, I think there's a big difference between continued currency debasement over a long period of time, debt to GDP going up and up and up, versus current hyperinflation is really currency failure. And Larry,
Yes.
I think you said this. It's total loss of trust in the currency. It's people
Correct.
saying, "I will punt this currency and get anything else in exchange."
Right.
I think that will probably happen to other currencies well before it happens to the dollar. Larry kind of said this too. The network effects are just massive for the U.S. dollar, and that's a lot to overcome. So when I hear nothing stops this train, it's more like debt accumulation and dollar debasement will continue to happen. But I would differentiate that between also saying, and there's going to be hyperinflation and people will ditch the dollar. And that's why I think it's harder.
I think that's right, John. I mean, but I kind of rate it as a 25% hyperinflation, 75%. We just have a lot of inflation. We look like, Argentina, you know what I mean? And inflation just becomes a persistent problem that we all learn to live with. The question then becomes, does the political cry become loud enough to fix it, to legitimately take the pain and fix it? Or do we go the other direction where people, say, oh, there hasn't been enough inflation, or we're going to help the people who are suffering from this inflation, the way Gavin Newsom was going to say something along the lines of, we're going to send you money to help you pay for your higher gas bills. And, once we get into that doom loop of the government's going to, there's a lot of inflation, and guess what? We're going to send you free money to help you fight it. Well, there's your tell, right? That we're going to the hyperinflation camp. So it's hard to know. No, we don't know. There are too many moving pieces. There really are.
I think the World War II analogy is very appropriate here, because the way I look at it, you can basically do four things to reduce your debt to GDP. And that's the main metric people are looking at for something being unsustainable, right? If your debt's kind of increasing along with GDP, sure, debt's going up nominally, but GDP is arguably a country's ability to generate productivity and income and pay down that debt. But if your debt to GDP is going up, then the debt's increasing, faster than your GDP is. And the ways you reduce or contain that is by economic growth, real economic growth and productivity. It would be reducing government spending, it'd be increasing taxes, or it would be inflation, debase the currency.
Correct.
And the last time the U.S. had this level of debt to GDP, it was post-World War II. And the U.S. did all four of those things post-World War II.
Right.
But importantly, go ahead. Yeah, go ahead, Larry.
I was going to say, the thing to keep in mind that makes this condition different than that condition is that in that condition, you had a much younger country that wasn't as fully built up, and you're about to have an enormous baby boom. And so you had all these GIs returning from the war, needing houses, needing cars, needing appliances, and making babies. And so, the real, there was a lot of inflation from 46 to, the mid to late 50s, but there was also a lot of real growth, because there was a lot of stuff that was needed. And, and there was a lot of technological investment. I mean, Eisenhower started the interstate highway system, and, put the entire nation on wheels. And so that's what, we had growth that got us out of there. Now, maybe we'll get growth in AI and some other things that'll help get us out of there. But we certainly don't have a lot of demographic growth. I I mean, it's not like your generation. I mean, I know you have a young child, which is great, but the typical younger people, are talking about not having babies, right? So, yeah,
It's expensive. It's expensive.
Yeah, and just to piggyback on that, Larry, I agreed that that's a huge difference between World War II and now. And then just the spending, we did reduce our spending post World War II because
correct.
It was wartime spending.
Yeah, no, it went down. In fact, the Keynesians were saying they were really afraid that when the war was over, we were going to have a massive recession. In fact, I've got a quote of that in my book, and Saif talked about that in his book. And and of course, nothing of the I mean, spending fell, but government spending fell like 70% when the war ended, and yet the economy boomed, because they just took all that stuff they were making tanks and they started making cars, and and by the way, everyone who had fought in the war and hadn't died wanted a car,
Mm-hmm.
So.
And on top of all that, the Fed did yield curve control, kept rates low, and let inflation run wildly
way
high.
high. Yeah, it was 18% in 1946.
Exactly.
18% inflation. When they kept the long bond at 2.5 until 52. So it was, it was pretty. Yeah, it was a different set of circumstances, and I don't know who held those bonds. Obviously, they got killed. And a lot of those bonds were bonds that had been bought by patriotic people who, bought war bonds during the war to support the country. I don't think people are going to necessarily feel as patriotic about losing their money on this time around, given kind of the way our governments behave. But it's, look, guys, it's a mess. Sadly, it's a mess. And I mean, my generation's in a large part to blame for, but not all of us. Some of us have seen it. Yeah, some of us have seen it coming for a long time. And, there've been people in my generation and above that have been fighting to try and prevent it. I mean, Ron Paul saw this stuff 30 years ago. The Austrian economics profession saw it 30 years ago. But, we got taken over by Keynesians. And, and here we are. We've driven down a dead end road, and, we're getting close to the end of it, I think.
Yep.
Brady, I actually have a tweet that referenced what you said earlier in this show, the quote, "We're all Keynesians now."
Yeah.
I put out a tweet once. I was like, the real turning point is going to be when a president says we're all MMTers now.
Right. Exactly.
Yeah, that's coming. I mean, Nixon said that when he jumped off the gold standard. He was borrowing it from Milton Friedman, who said it originally.
Right. Yeah. Friedman said it a couple of years before. Yeah.
Yeah, it's a mess, but the bright side of it all is that we have this fabulous technology which is decentralizing the world, and so Tucker Carlson has more sway than CNN, and Joe Rogan has more sway than CNN, and the three of us can talk to each other from different corners of the country in real time.
Yep.
For peanuts, and so nobody has to listen to the New York Times anymore. We know it's a rag. We know they lie. That's the democratization and decentralization of information, and Bitcoin brings the democratization and the decentralization of money, and so they can't do their seigniorage thing to us anymore, because guess what? You can't fuck with it.
That's right. That's right.
It's money you can't fuck with, right?
You did mention your book, which I'd love to spend a couple minutes on if we can.
Sure.
So you're writing a book. It's getting close to the finish line.
Yeah, it's more or less written.
What can we expect?
Well, it's more or less written. I'm keeping the title secret, and I asked for cover art. I don't want to show it yet. I want it to be a surprise, but you'll like it. It's more or less written. The time frame for release is late this year, early next year, so it's not too far out. And the model or the goal of the book is to explain in simple terms that any American can understand why we have the problems that we have, principally driven by inflation, how we got here, in terms of the history of the country that led us to this point, Keynes, etc., and then of course what we can do to fix it. And it's meant to be, there are a lot of good Bitcoin books out there, and it's got Bitcoin on the back of it. I mean, part one is the problem, how we got here, understanding the problem, fully understanding the problem in depth with all the historical data that I've accumulated over my career. And then it's also my personal stories woven in there to make it a little more interesting, show you the bright spots and the warts, because people don't just like reading textbooks. And then the second half of the book is the solution. How do we solve this problem, given that we've got unsound money and that's what's caused most of the misery in the world. And what really drove me to write it, guys, was that I got so frustrated sitting around watching, blue-red debates and, friends, people. I mean, and I have people on both sides of the aisle, personal friends. We probably all do. It's sad, but we do. And you guys are all focusing on the wrong stuff. I mean, you're missing it. You're missing the underlying issue. It's as if we're all drowning, and you're worried about the color of the water or something. I mean, it's like, well, we're drowning. I mean, we got to find a life raft, and so that's really. And again, there've been a lot of great books written, but I don't think I want to get it in the airports. And I want to get it. I want to keep. It's not going to be super long. It'll be a couple hundred pages, but no more. It's not going to be a textbook. It's going to be a layman's guide to what's wrong and how to fix it. And so I want any citizen at any level of economic knowledge or financial knowledge to be able to pick it up and read it and go, oh yeah, I see what he's talking about. I get it. That is the problem. That's why this is all not working. And you know what? We got to end the Federal Reserve. We just got to end it. And we got to go to sound money. And so that's if I do the job correctly, that's what the book will accomplish. And I'm doing my best to do the job correctly. I don't know. I don't know how good it'll be, but we'll see. It'll be what it is. It is what it is. It'll be the best I got, and that'll be that.
It's hard to write a book.
It is hard to write a book. I've discovered that.
It's hard to write a book.
Yeah.
It's a lot goes into it that you don't think, might not think of. Well, that's exciting. I'm looking forward to hearing the title, seeing the cover art. Apparently, it's awesome. That's what Larry said before we jumped on.
Yeah.
It'll knock your socks off.
I tell you what,
I'll send
it to you in a DM.
Oh, sweet. That'd be great. Awesome. All right, guys. We'll wrap it up there. Tomorrow's the election. Let's see what happens. It's a fork in the road for America. We'll see which path we're going down. I just, whatever happens will happen. I'm not going to say which way I want to go for, on this particular venue, but I want it to be a big win, or enough of a win where there's not a question on either side about who won, so that we can just say, okay, this is where we're going and move along. Don't want lawsuits and states and hanging chads and all that kind of stuff.
Yeah, no, I feel another Bush Gore coming on, which would be, we sure don't need that. But yeah, I mean, I obviously lean in one. I lean heavily in one direction, but so be it. I mean, whatever it is. I mean, unfortunately, both sides. The fiscal problem won't get I don't believe, totally solved by either side. I mean, I think Elon's idea is a meritable one, but honestly, I think we're pretty far gone, and so I don't know how much we can move the needle on that. We'll have to see.
We'll have to see. Yeah. All right, thanks, gents.
Okay, thank you. Very nice to be with both of you. Thanks, John. Thanks,
right. Thanks, John. Thanks, Lawrence. Appreciate it. Awesome. Another great episode. Really enjoying being back in the saddle. Swan Signal Live, hanging out with my co-host John and some of the best minds in Bitcoin. We will be doing another rip like we did on Friday, where it's the four of us. It'll be me and John and Steven and Brandon, just going through the news. There's going to be lots to discuss on Friday, so you can join us then. And we're just going to keep that crew moving forward on Fridays, which I think will be a lot of fun. Wednesday, we'll be just talking news, community type stuff, seeing what's going on with the plebs in Bitcoin land, and we'll have the Tuttle twins on for the second half of the show to talk about their Bitcoin sequel episode of the educational animated show Tuttle Twins, and that'll be a lot of fun. Also want to shout out Marathon for helping to support the show. Thank you for your support. And finally, check out the Swan app. I'm going to throw up a QR code. I always have to go above this thing. It's kind of awkward. I'm going to figure that one out. Anyway, check out the Swan app. You can scan the QR code, swan.com/app, search Swan Bitcoin in the App Store. We've rebuilt this thing from the ground up. It's really an amazing app. It's super fast, super responsive. 2 or 3 minutes to onboard. Seriously, just 2 or 3 minutes to onboard. No hassles. We've gotten rid of the face scanning, the ID photos, all of that. You can stand next to your friend or family member and in 2 or 3 minutes get their first sats. It's a great orange pilling experience. So check out the Swan app. Next time a family member or friend asks you about Bitcoin, and those questions are going to start ramping up over the next 12 to 18 months. And as you get them, have them pull out their phone, search for the Swan app, and get them on board. And in just a few minutes, it's as easy as possible. We also have IRAs. We also have a Swan Vault, which is our collaborative custody solution. So you can check both of those out at swan.com. And we will see you on Wednesday and then on Friday. Thanks for joining us today. Take care, everyone.